Good afternoon, everyone. Welcome to today's workshop, where we are going to cover Learning Unit 4 and Learning Unit 5, talking about your cash and credit, as well as sundry journals. Can you just indicate on the chat function if you guys can hear me? Can you guys hear me? Okay, great. Okay, so in today's session, how the session is going to work is we're going to first briefly touch on the theory regarding Learning Unit 4 and 5 and the key things that you need to remember, and then we'll do a practical question after that where we will work through a question and identify what is credit and cash transactions and how to actually record them properly in the journals. Okay. If you've got any questions, please just stop me as I go along and I will address them as we go along. Otherwise, I will make some time at the end of the session where you can ask me some questions. Okay, so before we even start with Learning Unit 4 and 5, let's quickly take a step back and see where we are at currently in the accounting cycle. So like I said previously, in the accounting cycle, we start with transactions. We have source documents and we capture those source documents, the transactions on it, in our journals. So each and every transaction will be captured in the journal based on those source documents. Then once we have captured all of the source documents in the journals, we will then go and total all of those transactions that were captured in the journal. So in my example, we have 5 transactions that we captured in the journals, and then we summarize those journals as 5 entries. Then that one total that we have at the bottom of the journals will then be transferred into our general ledger. Now, the reason we do this is we want to try and summarize the financial information in as compact a set of information as we possibly can in order for the users to be able to make decisions as well as get relevant information quickly and not go through all the bulk and the detail. Then those totals that we have captured in the general ledger, once we've captured all of the totals, we will then go and balance each general ledger account to work out what is the new balance or the account total. Those totals or balances will then be transferred into our trial balance that shows our final debit or credit balance, which is a summary of all our general ledger accounts, either under your financial statement position heading or under your nominal account. So statement of financial position is your assets, your equity, your liabilities, whereas your nominal accounts is your income and expense accounts, which shows your profit and loss. Now, to make it easier for you guys, just to when you study what type of journals we are dealing with, in your cash book receipts, your cash will increase. In your cash book payments, your cash will decrease. Whereas under your petty cash journals, your petty cash will decrease. And then for your debtors journal, you will focus on credit sales, and that would generally increase your debtors control. And then your DAJ, which is your debtors allowance journal, will show all your credit returns, rebates on your sales, and that will decrease your debtors control. Then in your creditors journal, you will capture all your credit purchases that will increase your creditors control by crediting it. And then in your creditors allowance journal, we would capture any credit returns, rebates on those returns, and that would decrease our credit controls. And then the last one, anything that does not fall into the top cash or credit journals will then fall into the general journal. Now, the first 3 is your cash journals, so that would be your cash book receipts, cash book payments, and your petty cash journal. Whereas the following 4, the debtors journal, debtors allowance journal, creditors journal, and creditors allowance journal are your credit journals. And then the last one is where all your sundry transactions will be captured. So that is anything, for example, interest that we raise on the overdue account, any amounts that are written off as bad debts, or any other fees or corrections or errors that we need to correct will be captured in our general journals. Now, this is just a brief summary of the steps that you will have to do in order to complete your journals. This will assist you guys and making sure that when you do the journals that you actually complete them correctly. Now, initially these steps will take you a long time, but as you get more familiar with it, it will go a lot faster. So in the beginning, what I want you to do is rather focus on the steps, and as you get more and more familiar with them, it will also start to increase and you will be able to complete the journals a lot faster. So the first step is to identify what kind of journal are we looking at. Now, if I talk about what kind of journal, I am referring to the journals that I've just indicated. So all your cash journals, your credit journals, and your general journals. Then you have to decide which accounts or columns in your journals are affected. So for example, let's say our owner gives us cash. What columns would be affected? Our bank account would be affected. We would receive money from our owner. And our capital account would be affected because the owner pushed capital into the business. Then we have to start with the main column. Now, the main column would be dependent on what type of journal we are looking at. So if we have the cash book receipt journal in our example, our main column would be the main column. That amount is inclusive of it, so that represents 115%. Then once we dealt with that, if we have, for example, a sale to a debtor, we would take off the 15% that we charged our debtor and put it into the output VAT column. And then the remaining 100% would then go to our sales column. With a scenario, the first scenario of capital, we would not have any VAT, and then the capital amount would be exactly the same as the main column. You do the first 4 steps for all the transactions in a specific question. Once you have finished those steps, you then total the columns when you are done. Now those totals we will then transfer into our general ledger. But before you do that, please make sure that you are balancing. So that means your main column should match all the other columns. So that means, for example, your bank column should agree to your sales and output VAT. The exception to the rule is the cost of sales column, which is separate in our journals. And that will be dealt separately, so that has both a debit and a credit. So will not be dealt with when we capture the other columns. Okay, number 8. Each column then gets posted to a particular T account. Now that T account, the name is either the name of the column or the name of the T account that you've listed under the sundry details. Now, what you should remember is there can be multiple amounts in one general ledger account from different journals. So all the journals will go to the same T account. You only have one T account for a specific account. So let's say, for example, your bank account will show all of your receipts as well as all of your payments and any journals that you have processed to the bank account or corrections. The T account is then balanced or total to give you the final number of what that account is worth. And that number is then presented on a list called the trial balance. So this is where we summarize our trial balance. We split it between the statement of financial position and the nominal accounts, so that we are able to work out what is the net worth of an owner in the business, as well as what is the profit and loss in a specific entity. Now, if we talk about the general ledger, some things you need to remember is each of these columns will either have a debit or a credit, will affect either a debit or a credit in your T account. The main column will always be debited and all other columns will be credited. Now, the same is also true for your payments, that your main column will be credited and then everything else will be debited, so the opposite. Now, what you need to do is on the right-hand side, I've given you some examples of how your accounts will be affected, just so that when you study it, you know exactly which direction to post the specific accounts. So in our cash book receipt, our bank account will be debited and we will credit all the other accounts. In our cash book payment, our bank account will be credited and we would debit all our other accounts. In our petty cash, we would credit our petty cash and we would debit everything else. In our debtors journal, we would debit debtors and we would credit everything else. And then debtors allowance, we will credit debtors and we would debit everything else. And in the creditors journal, we would debit creditors and debit all your other accounts. And in your creditors allowance, you would debit your creditors and you would credit all your other accounts. And then in your general journal, this is where you need to decide which account will be debited or credited based on the information provided. Now remember that your debits there needs to equal your credits. So whatever you have on the debit side should total up to what you have posted to the credit side. In your general journal, you will have two tall multiple accounts that you will account for. At the bottom, I've indicated the debt click principle, where how it will affect your assets. Your expenses and your drawings will always increase on the debit side, whereas your assets, your liabilities, income and capital will increase on your credit side. So that is your accounting equation. Now, if we summarize our trial balance, we can split it up in the statement of financial position, which has our assets, liabilities, and equity. And then we have the nominal account section, which is your income and expenses. Now, remember the debit column, if we total that, should agree to what the credit column is in your trial balance. This is a snapshot of what the company's worth is at a specific point in time. And people can use those to determine what is their worth in a company as well as what is the profit or loss. Now, using the process that was explained in the previous slides will help us to have R1 value for an account, and we don't have to go back to the 8 journals to try and work out what something is valued at. So this trial balance is a summary of all the information that a user can use at the end of the day. They do not have to go back to all the detail. And if you quickly want to answer this, you can imagine this is a very summary at the end of the day, because your users or your managers do not want to go back into the detail and try and figure out what is going on. Okay, do you guys have any questions on Learning Unit 4, Learning Unit 5 specifically? Do you guys have any questions based on what I've discussed?